Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a third consecutive indecisive pattern on Friday. This time it was an indecisive doji cross. The latter part of last week had been limited by a combination of the 50% Fibonacci line of the January 2021 to September 22 move at 109.44 and the bright red upper time, currently 109.76, of the mid-April to early June shallowly bullish shift pitchfork. I'd also think about including in there the dark blue July 2018 to November 2018 head and shoulders neckline, currently at 109.96. Meanwhile, below we have the 50% Fibonacci line at 108.64, and below this we have the bright red middle time, currently 108.40, plus all the moving averages. And so far today, not much. Either side of Friday's true range at the moment. Cable, aka sterling against the US dollar. A higher but indecisive spinning top on Friday. Now hold on, let me rephrase that a bit. It was a higher pattern, but it is a borderline indecisive spinning top pattern and follows on from the previous session's combined key reversal up and bullish closing white Mariboso. Overall, we are still within the dark blue mid-July bear channel, currently 126.46 to 127.82. All this after having recently exited on the downside from the late April to late June bullish shift pitchfork. We also have topside the flatlining short medium moving average, currently 127.81. Whilst below we have the medium moving average, currently 126.86. As well as the long moving average, currently 126.66. So we're sort of bracketed between those two. We also have down there the combination of the 50% Fibonacci line of the June 2016 to the September 22 move and the September 2020 low, both at 126.99. So far today, a small attempt higher from a lower open, but still capped by the dark blue upper bear channel line and the short medium moving average. Euro sterling, a second bearish black crow on Friday after the previous session's key reversal down and early last week's horn top pattern. Prices dipped down and closed just below the declining long moving average, currently at 85.52, and just short of testing the combined lows of December 2022 at 85.45 and December 2023 at 85.47. Further down, we have the bright red neckline, currently at 85.23 of the May to August 2022 head and shoulders continuation pattern, as well as the flatlining medium moving average, currently at 85.09. So far today, well, a small dip lower, just below the combined lows at 85.45 and 85.47, before a recovery back up and around the long moving average at the moment. US dollar against the Japanese yen. A relatively small bearish double on Friday, given recent ranges, with prices moving over, though not closing above the lesser Fibonacci line at 146.69. Since the market broke down 2 weeks ago through the purple lower time, currently at 150.01, and the gold long moving average, currently 151.45, they've seen erosion of the bearish incentive by this lesser Fibonacci line, as well as the 50% Fibonacci line of the January 2023 to July 2024 move at 144.58, and the congestion between the interesting 38.2% Fibonacci line of the same move, and that's at 140.48 before turning back upwards. However, the reactionary move higher has been limited, not even coming close to the broken purple lower time. On top of all this is the shadow of last month's key reversal down. Now, so far today, a move higher, but not as far as the combination of the overhead medium moving average and the June 1990 high as yet. US dollar against the CNH, the offshore Chinese yuan. A bearish dark cloud cover pattern on Friday after the previous session's hanging man pattern. The very recent recovery has seemingly some resistance of note at the May 2020 high at 719.64, and Friday's actions may have been an avoidance strategy. Overall, the drop down late 2 weeks ago out of the late December dark blue 2023 August to 2024 bull channel easily reached the primary target X2 down at 714.90 and just managed to reach the secondary target X3 down at 708.60. And that was early last week before shooting back up again. The recovery during the latter part of last week is now approaching the 50% Fibonacci line of the early July to early August move, and that's at 719.65, which is so close as to be almost identical with the May 2020 high, thus adding to the overall overhead resistance. All of this is in the shadow of last month's monthly key reversal down. And so far today, small recovery back upwards, but very cautiously approaching the combined resistances at 719.64 and 719.65. US dollar against the Mexican peso. A third bearish black crow on Friday, and the smallest range, true range, and overall in recent days actually. Prices opened above the congestion at 1885.40 and punched down through the congestion at 1879.15, but were unable to sustain the move, closing just above both. Well, just above actually the 1879.15 move. Further above we have the March 2020 low at 1915.03, whilst below we have the February 2020 low at 1851.71. Overall, prices remain within the bright red mid-May to mid-July bullish shift pitchfork. We are right now in between the overhead middle time, currently at 1978, and the lower time below, currently 18.53. The short medium moving average, currently at 18.23.19, is just above the lower time. So far today, well, not much. We've had an exploration of the congestion below at 1879.15 right now, as well as the topside resistance at 1885.40, but prices have not exploited either.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.